over the agenda if you want. We can kind of go over the agenda if you want, or if you guys can
Yeah,
go
just
look.
go through it real quick, Zane, just so we can all, yeah, just go through it real quick, and then we can, it's super early, right? Because this is not going to happen until November. It's the week before Thanksgiving, so everybody can be aware of that. So we're trying to make it to where it's the least traveled week. So there's that. So yeah, go ahead, Zane.
Yeah, well, I mean, anyways, some of you guys were there last year. 3-day event. Thursday, last year it was just for like inner circle members only for the Thursday event, but this year it's going to be for everybody who comes in town for Thursday. And that'll be at the top of one of the high rises here in Birmingham called the John Hand Club. Super nice, open bar, just networking, good food, stuff like that. On Friday, we're going to have Nolan's whole CRE team that he talks about so much. Nolan, I mean, I guess you should maybe go through just kind of like your team here and just introduce them a little bit.
Yeah, yeah. The Thursday night thing will be awesome because it's just like everybody that's going to be in town, whether you're flying or driving. Like I would recommend, or it would be awesome if you could be at this. It's just the location is awesome. It is really cool. It's downtown. You can see everything. We'll have everything comped. You can come and have as whatever you want, food, drinks, the whole thing. Um, I think we're going to have it at the same venue as last year. It was a really, again, we're keeping it more in tight. We're not just like having anybody and their brother show up. So, saving at this same venue, Avenue D. I'm going to speak for a little bit. I'm going to have Sam Zoldock, who's my main broker. You guys have probably heard me talk about Sam before. I mean, I bought like 10 buildings from him. So he's a huge asset for me. He'll go over how to evaluate deals, how to develop relationships, being different as an investor, that kind of thing, or as a broker that you're developing. Mason Morris is a lender of mine at West Alabama Bank. I've got maybe mortgages with like on 3 buildings with him. He's going to go over just like bank lending, how they underwrite deals, like determining intrinsic value, that kind of thing, where he's kind of forecasting, into the future for interest rates and banking and things like that. Brian Cloud is the attorney. He's a different attorney from last year for those that were there. The guy last year wasn't a bad guy. This guy is yeah, right. Richard was here. He wasn't a bad guy. He just like he was just a full on attorney, everybody look at me kind of guy. And that's not what we were all there for, but that's okay. Brian, he has his name on the building. Like he's actually, he's strong. He knows all about LLC or entity structures and syndication ideas and things like that. He's really good. He's a closing attorney. He's really good. Clay Hagler, uh, you guys have seen him before. For those that don't know Clay, I can obviously introduce you to him. He's an amazing accountant. If I'm being totally transparent with you guys, he's probably have saved me over $1 million of tax in the last 3 years, probably just in taxes, just
He's
by.
also
I mean, it's remarkable. He's a magician, but
he's also a great golfer.
he is not a bad golfer as well. Yeah, he can golf pretty well. But yeah, he is the owner and part owner, at least, of Hagler and Brocado. He's going to go over taxes, the new beautiful bill, bonus depreciation, exchanges, things like that, what he anticipates in the future. And then Justin Kraft is our president of Nallen and Associates in Birmingham, which is what I do during the day, which is our life insurance business. And you can just see he's going to go over some details of like, hey, does this strategy make sense to couple with? Because a lot of you people, guys that are already here, guys and gals that are on here, are already doing infinite banking or you've done it previously. It's a great it's a great coupler with real estate. So he's going to come in here and actually kind of break some numbers down and just kind of do some math and show you guys, hey, this is a good move. If you don't do it, it's not a big deal, but you're just leaving money on the table. It's pretty matter of fact. And then have a little happy hour that night, which is a lot of fun. It's just kind of more hanging out, getting to know everybody. And then 8:30 in the morning, we'll probably come back to Avenue D or we'll find a new location. And then Peter Seligman, I'll spare you guys all the details now, but believe it or not, I met him at a top of a mountain skiing in Vail like 3 years ago. I just met him up there and I just said, I'll call you. And he didn't believe it. I actually did call him. And we've developed a friendship where I do bi-weekly calls with him every other week, just going over how to candidly just serve my clients and are like people like you better. So like anytime that we roll out something new for the collective or whatever, usually Peter has something to do with it. Like he's always helping us improve ways to serve you guys better. So I get on kind of again bi-weekly calls with him, always trying to just improve our service to you guys. So Peter's going to come in here. He's made millions of dollars in live production, servicing his again his business owner clients, things like that. But he's done life coaching and things like that. Not to get philosophical, but he's just a really sharp guy, and I think it's beneficial for people to hear what he has to say. It's benefited me personally. So, and then finally, we'll get on a property tour. We'll go there for a couple of hours, go look at some buildings. We'll probably walk. I'll get with a couple of my tenants. And again, Richard was there last year. I'm trying to think of anybody else that was on here.
Michael was here.
Michael was here. Parker was there. Maybe Bruce was there too. Connor was there. But we went on just a property tour. We get on like a big bus. Another one of our clients, she owns a busing company. We'll rent one of her buses and we'll go drive around, look at some buildings. I'll kind of give you the stories, answer some questions. We'll get out of a couple of them. We'll walk them. One of my tenants will have sandwiches and we'll have lunches there. We even had like some beers there. Like it was a really fun experience. So I'll ask this, Richard. I don't want to put you on the spot, but what was your experience last year, just to get other people like either for it or against it? Like what was your opinion, man? I'm just curious.
I
Richard and
don't
a
think,
couple other guys.
yeah, I don't think I'd be doing this right now had I not gone to that weekend. And just for the pure fact that it made it real because I found Nolan on TikTok, and so you never know.
Right.
Uh, I drove to this event, and it was last minute. I think I joined the group like the week before. Was coordinated with Zane and got over there, and everybody was great. I was impressed with Nolan's whole family, his brothers. Got to meet his dad. Kind of cool.
Yeah.
And so it was just a fun time, and it was, I was green. I didn't do nothing, and so it was very enlightening and was very encouraging. Probably that was the biggest part. Was encouraging that if I can do this, and so it just kind of was a kick in the butt. And so yeah, I'm,
Awesome.
I'm, I'm
Appreciate
looking
that.
forward to this next one too.
Yeah, it'll be great. And again, I don't want to take up the whole time on just on the event, but I really do want to hammer it. Like if you can make it, that's why we put it all the way to November 20th, like again, the weekend before Thanksgiving. So if you can throw a dart at a map on your calendar and kind of punch it out there now, hopefully you can find a way to rally around this weekend. We wanted to throw it out there further. So and I won't put Parker, my brother, on the spot either, but I know that he drove all the way down from Indy as well. But Park, what was your experience? I mean, I know you're my brother, haha, but did you what was your opinion of it as well? Just so you can get somebody like again that Richard that didn't know me from Adam, and then you have Parker on the other hand who's known me since he was born, that kind of thing.
Yeah, it's a little more of a drawback having to know you since I was born, of course. But
That's right. That's
no,
right.
it's good. But no, I truly had a lot of fun that weekend. It was a great experience. I mean, one of the biggest takeaways I had that weekend was just from Clay, and the fact that all the tax stuff and all the things that was, just priceless information. And just the way it was all structured and stuff was fantastic too. Given, I mean, I have a buddy who actually, not to chalk you up here, but I have a buddy who did like some other multi-family like kind of group thing, paid however much money and doing this, and this, and they had kind of something similar to this. Was we had this big meetup and basically had people show up and there's like bologna sandwiches and like a pamphlet and they said thanks for coming, we'll see you next year kind of thing, and just like hey, walking through the properties, great information from the life insurance guys, plus plus Clay and then other people's experiences and just the networking with each other and, trying to make something happen. So I think it's the best thing is putting people in the same mindset in the same room and very dangerous.
Awesome, dude.
Hey,
And
hey, Nolan, I'll say
Yeah.
one more thing.
Yeah.
Just the mere fact that your brothers and your dad were doing this because of you, I think speaks volumes. Because you know what? To me, I was wanting to know if this thing was real. And if your brothers are doing it with you, that tells me it's real. Because you know how brothers are. I got a brother. He wouldn't trust he wouldn't trust me as far as he could throw me. But if he was seeing me having some success, and he might want to join me. So that to me spoke volumes. So having Connor and Parker there and your dad was pretty cool.
That's awesome. No, I appreciate that. Yeah, again, it's something that Zane and I have like we've been kind of putting our heads together for the last couple of weeks and just trying to really hammer down on this because not that this is like the game seven of the World Series or the Super Bowl, but it's like to me, this gets all of us together, not just on our, in front of our screens, like doing this whole Zoom thing, but it makes it more real. It makes it more digestible. And then in my opinion, I think it makes what we're all trying to accomplish with real estate more achievable. Really, when you leave there, you're like, wait a minute, like this is actually not as difficult as I think it is. But when you hear $1 million or $4 million or whatever it is, it's initially a little intimidating. Myself, I've been there 500 times. But it's like when you get around these other guys that are already maybe a couple of guys are doing it, you see the team, how they're talking, you hear the banker, they're like, look, this is not as hard as you think. You just need to give me this, and that. It makes it believably achievable. Maybe the best way I can describe it without being like, oh, high and mighty unicorns and show ponies. But like I just say this to like the best of way I can. It's like I recommend you if you can make it because Zane and I are trying to blow this out. We've improved every year on our service, on the people speaking, the location. Literally like when we went to one of my buildings again, my tenant was like, yo, what's going on? Nolan, hey, I got sandwich. He had a cooler full of beer there for everybody. Like it was, I'm like, that's the relationship I have with one of my tenants there. It's just like it's just not real. It's just cool, So I say all that. If you can make that happen, again, Zane and I will send an email to everybody in the next week or so, just like giving you the official invitation and stuff. But we really highly recommend you if you can make it. We would love to have you. Is Zane? You got anything else to say on that? And then we can kind of get going with the call.
No, yeah, that's great. Yeah, we'll send an email out and also pin whatever we need to pin at the top of the school group so you guys can see that, have that in front of you. Um, we give the people in the collective the first dibs on seats. So there's only 50 seats on the bus. So we can only have really 50 people at the event. You guys are going to get 2 weeks to just sign up for it before we start sending it out to people outside the collective. We're charging $1,000 to people outside the collective. So if you guys want to lock in your spot, obviously do that within the next 2 weeks, or if there's spots open afterwards, then that's great too. But but yeah, I mean, to jump into today's live call and everything, we have a lot of people who have a lot of great questions and a lot of deals that they're working on that they love to ask questions on. But we also have a brand new member, Rigel.
Yeah, Rigel.
Sorry to put you on the spot, Rigel.
Yeah,
Rigel, it's no
Rigel.
problem. It's okay. It
My
happens
bad.
every day of my life. Nice to meet everyone. Am I supposed to intro myself or what?
Yeah.
Okay. I'm 22. I'm from Huntsville, Alabama, but I'm currently living in Los Angeles. Just graduated USC, hence I'm still in LA for another 6 months. Started investing in residential about a year and a half ago, doing fix and flip, and saw some success in that, but got Nolan's videos, kept popping up on my For You page and kept saving them. And I basically had Nolan's exact business plan of buy a bunch of residential real estate and rent it out. And, after a decade plus, start to pay down that equity and create wealth. And I thought his points about industrial and commercial real estate in general made a lot of sense. So I started looking into it and decided to join the collective.
Awesome, dude. Well, Rajal, we're excited to have you, man, and that's kind of what the whole point of this is. Again, is just everybody all chasing a very specific goal. I'll say this, and then we can get into everyone's deals and things like that. But I was telling Zane about this just the other day, and this is just, and I was talking to Parker too, actually, about this. But like, this is something that I would challenge everybody to think about. You know, when you guys think of like, again, this is like a hypothetical or at least like philosophical, but like when you think of like the black hole, like that's out there in the universe, and it's like there's what they call the singularity. It's like everything comes in together at one thing. I would challenge everybody to figure out what that singularity in your life is that you are chasing, right? And I'll be clear. For me, we were at the beach a week and a half ago. I'll be very, very brief, but we were at the beach for a week and a half ago, and everybody was waking up around 7:30. My daughter woke up at 5 because she's a terrorist, and that's just what she does. So she got up really early. I got up with her at 5 o'clock in the morning. I saw the sun coming up. I made some coffee. I was working on my computer, and she had her little head on my leg watching a little show, drinking her little bottle. And I was like, to me, this is what I'm chasing right here, where nobody's around. It's just me and my little girl. The sun's coming up. I'm at the beach and I'm doing work that I genuinely enjoy with my little girl next to me while everyone's asleep. So I say all that. To me, that's like my quote unquote singularity. Like that's what I'm chasing. And I want to experience that as often or as little as I'd like. And I'm like, okay, so that's really if I'm chasing that. So everybody here has the singularity. They all have something that they're the experience and the moment that they're chasing. They want to do more of. So my question to you then is the next step, of course, then the layer up is okay. I don't want to own commercial real. I want to have financial freedom. How do you do that? It's by owning commercial real estate. So if you distill it all the way down, it's to have a moment or an experience that you want to have as often as you want. So if you can discover that in your own mind and think about it, I think in my book, the stronger your will to succeed will be if you're stronger, if the singularity is the strongest. Maybe that's a little philosophical, I guess, but that's the way that I think about it. When I think of that moment, it helps me want to stretch and go further and go harder and be more bold and more courageous and have more bravery to ask those questions or to make those calls or whatever it is versus wanting to be at quitting time and just slow down. So I say all that as not a motivational speaker, but just as like we'll equip. Everyone has the tools. They have the equipment. We've got, the tool belt. Now it's time to actually, go out and get it. And when you have that strong idea of what you want, my book would be is I think that your ability to go and achieve is just going to be that much better. Does anybody have an opinion on that or like a thought? Like maybe I'm beside myself on thinking that, but to me, that's helped me kind of push through sometimes when I'm maybe getting stagnant or kind of floating. Does anybody have an opinion on that? I'm just curious.
Well, Tony Robbins, Nolan, but
Definitely not a
uh,
Tony Robbins, if only. He's different.
no, no, you're more down to earth, and I like that. I'm a little more pragmatic and not super into that, but I agree though. You got to have your why. That's the other way people put it is, what's your why, and keep that mission and objective in mind so that you're always just driving towards it. And yeah, so no, I agree.
100%. Yeah, just a thought. Just a thought. Again, I don't want to get philosophical. And I don't want to take up all the time. So, any other thoughts on that before we kind of start to jump into some real estate deals? Cool. All right. Well, Matt, now I'm looking at you right now on the screen. Who is this? Is your son with you right now? Just tell us. You got somebody else here trying to
Yeah,
do some deals with you.
yeah, it's my son. This is Hayden, and
Hey.
yeah, he's been in wholesaling, and but he's caught the industrial bug, and has actually helped me to be more energized. He's up. We're working on deal finding every day. And matter of fact, we have one we wanted to pick your brain on. I talked to Zane about it
Yeah.
yesterday, getting ready to write the LOI, or actually written the LOI, but I wanted to just get some feedback on it.
Well, let's
So
let's jump into it, man. Absolutely. Yeah,
yeah,
that sounds great.
is it okay if I share my screen? Let's see if I
Yeah,
have a
100%. Yeah. Let's do or here, allow. There we go.
all right. So yeah, we've been looking fairly broadly, mostly using Crexy, but really taking that opportunity to engage with. Now we have a nice long list of brokers, and some are really hyped up about stuff, and others are, others are kind of VPs and not really wanting to take the time. But it's been good. But in this case, this is a 31,000 foot. It's close to a 10 cap. We believe we can put an offer in on it as a 10 cap, but part of the benefit is the potential value add. So right now, he's got two tenants, one in each building. One is a tire company, the other is a machine shop. The machine shop gave us 30-day notice. He's going to be moving out, and likely the machine shop will take over both buildings. Um, so,
How
uh,
likely? How likely, Matt?
um, very likely. And
Okay,
that would be part of my contingency.
understood. Okay.
The only couple of hangups, one is that that tenant has first right to purchase. So my LOI could go nowhere, but it's still worth putting it out there. He's associated with Hankook Tires. He's a subcontractor, I believe, for them, and they're in a nearby city. So strong tenant, but the acreage, he's talking about selling. Essentially, he's got 4 acres total. This sale here is for two, but he's tacking on another two for 200,000. So I'm offering him essentially going to offer two different offers. One is cash at 950. The other is I didn't put the actual 1.1 um, with a seller carry. We're starting at 3%, so 385 plus closing costs, which would be at that would be a 12 cap. Um,
Sweet.
so Um, in addition, though, what Zane had a great suggestion. I was thinking of incorporating the acreage into the total purchase. Zane suggested postponing that and doing an option to buy later if he's willing to do that. So he would hang on to that acreage, but when he was ready to sell it, we would put our offer in. The benefit to the acreage is the value add. So from from the story of the seller, who is basically he's got a lot of properties in the area, he's looking to just unload this. It's one kind of additional sort of headache, even though it's triple net. He's got to mow the lawn. He just wants to kind of that's what he stated was his reason. So um, he says there's a need for more buildings in the area, so we could tack on another 30,000 square feet for the land price of 200,000 plus. I'm estimating, I don't know really well, but say 700,000 to build two buildings or maybe one large one, just depends.
30,000 feet?
Yeah. Do you have a price per foot generally?
Let's see. Well, it depends on what you're going to try and do. If you're gonna trick it out, you're probably looking at 130 bucks a foot. If you're just going to make a shell, it might be 80 bucks a foot. I
Yeah.
guess it would just depend.
Yeah. So call it 130 just to be on the safe side. The current tenant has a lot of energy going in, a lot of electricity. So that's definitely higher than I was anticipating at 130 bucks a foot. That's 3.9 million.
Yeah, it's not cheap. It's not cheap to build, which I think that's what
Yeah.
makes the buildings right now so valuable that are already, especially buildings that are already occupied, but on top of it, buildings that um, are up to code and everything too. You don't have to go out there and, deal with the city and pull permits and things like that as well.
Yeah. Yeah. Okay.
Hey,
Well,
hey,
maybe there's
Noah,
another value add besides that.
Unless somebody else has a
quick,
different like price structure out there that someone has a different opinion. I
Well,
mean,
I mean, I
yeah,
think
what do you
I
think?
think we should at least go with somebody who's in the business of building like buildings, right? So
Hmm.
somebody's got to be in that area that has built an industrial warehouse space and can give you like a real like hard quote. I don't think I would discount it necessarily yet,
Hmm.
but
No, I'm not
yeah.
disagreeing.
So
I'm just saying that the cost is the cost. It's not like it's pretty universal. Maybe California, Matt, might be a little different, but I mean, we're seeing even in Alabama, I'm seeing pricing at like at least three figures. Like it's $100 a foot is pretty down the middle of the fairway. I mean,
Okay.
Hey, Nolan. So I was
what's
actually
your opinion?
looking.
Yeah.
I was actually looking at similar options around here, in terms of doing some sort of development, and talked to a company that basically does the steel construction, steel warehouse construction, and got a just kind of rough estimate from him, and he was actually quoting more towards the $65 a square foot for the construction of the building, building it out. They really could go, as much or as little as you want. But he was saying that's something that's kind of finished off and stuff like that, close to 65, maybe $70
Wow.
a square foot. So I mean, that's something I was really starting to look at around here, and really, kind of interested in hearing what you guys have found out in terms of any kind of development work.
So you think so what you're saying is like I'm talking, I mean, just so we're all on the same, like everyone's on the same
Yeah,
page. So you're seeing Jim, you're seeing $65 a foot, and that's total. That's like three-phase power, permits pulled, COs completed and signed off on, $65 a foot.
that's what he was just giving me a rough idea with. I mean, I didn't get into. I mean, I wanted to start looking at some of the numbers, some of the price of the land and stuff around here. But that was one of the things I was seriously starting to put some effort towards. So
Yeah.
yeah, I mean, and it's just one of the local guys here. They've done. There's a couple of them that are around, and that's what they do. Put up the steel frame buildings.
I just run with a guy who is in the construction business, and he's like, look, he's like, I could do it myself. I buy tax liens, I clear them, and then
Yeah,
I go and develop sites. And he goes, I can do it for $50 a foot, and I just double my price. So that's where I came up with $100 a foot. So I guess you could probably walk it down if the actual net cost is 50 to $55 a foot to develop and actually build a shell, you got to think about the profit that the contractor, unless you wanted to do it, Jim. I mean, I'm
yeah,
not in the I
yeah.
definitely will not be doing it. I will pay somebody, but um I mean, you might not be wrong. I mean, honestly, you might not be wrong. We're seeing other guys that are on the East Coast at $150 a foot. I mean,
Mm.
um all in, right? Like turnkey kind of thing. So I don't think you're wrong. So maybe Matt, honestly, like maybe the move is really 65 for $65 a foot. There's some deviation. Maybe rocket from 60 to $130 a foot, depending upon what you're accomplishing. I don't know.
Right.
Kentucky, you're in the
Yeah.
middle of the United States, so maybe it might be cheaper. So
It,
uh,
it's definitely not slam dunk in from that perspective, but that's why I think putting that off as an option to deal with later. Maybe it's just grading the land and doing storage or something. But it's an option.
yeah.
Um, as it stands, though, it's a great DSCR and good cash flow, but we're pitching seller carry, so it'll be infinite. And yeah, so he was open to the seller carry as long as it was he sort of hinted because he's got partners. He's like, make sure that your cash offer is lower, right? So they see the benefit. We're offering close to their asking price, and
Do you have Matt? If you want to go back to your spreadsheet real quick,
yeah.
I'm just looking at your debt. Do you have a guy that will do 30 years for you?
So I actually I contacted a private lender that has a no docs DSCR, but they're at 10%. So I threw in
Oh, I
10%.
understand. Okay, I follow you now. I see. Okay.
Yeah, even
Yeah,
at
they're looking
that,
at it. Understood.
it's still
Damn, it's
pretty
still
great.
strong. It's still strong.
Yeah,
Okay.
yeah. So
All right.
um, it may be that I can get in it without having to have other industrial experience. Um,
Now let
but
me ask this question.
uh,
This is for everybody as they're on here. Like, you know, I wonder if you ran the numbers at a 25-year AM and you had the interest rate at 7, I bet you your cash flow goes up, even with the guy leaving money in the deal. Just by changing it to, 25 years, I bet your cash on cash goes up. Yeah.
it does absolutely
Yeah.
not significantly. I mean, it's a ten thousand
So
dollar.
what, so are you just thinking because you're trying to think, all right, how am I going to get into this deal?
Yeah, I mean, obviously we can partner on the deal. I can, but if I could do it on my own, the
Yeah, yeah,
same
yeah.
way, that
Okay, then here's another question then too, Matt, and this is for everybody as well. Here's the question of the day, I guess. Then if forget your private money guy for a second, imagine you didn't have that relationship and you saw this guy selling this building, what should be your first, or what could potentially be your first opportunity to go find debt, who should you call? Who would you call? Not your brother-in-law, but who? I think Zane knows, but
You mean you said besides the bank or besides
I
private
said
money?
besides your brother-in-law.
You, you mean for like the down payment?
No, no. What I'm saying is so okay. One more time then. So Matt, if you want to go back to the flyer, so we can get our eyes on the building.
Yeah.
Sorry, not demanding. Just um, on that building right there. My
Hmm.
question is, how often does a building not have debt on it? Like how often does it really? How often do buildings not have debt? It may
We
be.
actually went to the records. We went to the county records. We saw who the bank is. That was one of the things I think Zane
There we go.
suggested is we call
Dude,
up
I'm
that
telling
bank.
you,
Right.
and I say this because it worked for me on my first
Yeah.
deal, like in your exact shoes. The building
Right.
that for those that were there last year, the first one that it's my huge ass warehouse in Tarrant, Alabama. I bought that only because I had the bank that was currently holding the mortgage for the previous owner was comfortable with the tenant and the lease. So I only say all that.
We're
What's
gonna call them. Yeah.
Man, call those guys, man, because they're already comfortable with the tenant, they're comfortable with the lease. And you could say, hey, I have, I've got a letter of intent, and these bankers are going to get that. They're going to say, I got a letter of intent out on your asset, on your collateral at Purdue Lane in Hopkinsville. I got a letter of intent on your collateral. I'm going to start shopping this debt. Do you have any interest in, keeping in
Put your name
control
in
of
the
that
hat.
paper still? And then
Yeah.
what do you think they're going to immediately say? Like, it don't matter who you talk to. It doesn't matter what if that loan officer sold that debt or he didn't. Like, they're going to be like, I would absolutely want to continue to hold that debt. And you automatically got a guy that now is in your. He's going to say yes before he says no, and he doesn't even know you. You know.
Yeah.
So
Yeah.
that might be the first guy, and you can get cheaper debt. And on top of that, too, I'm doing another deal. I might have mentioned it before. I'm buying the debt down. You might be able to offer that to them as well and say, "Hey, look, I'd like to offer you to purchase the debt down for another, 150 basis points for $20,000. You wrap that extra cost into the debt, and then that just reduces your interest rate down to maybe 5.5% interest over 25 years." And sure, you might have borrowed an extra $20,000, but your cash flow goes up because you're not coming out of pocket for that expense. You know,
Right.
so
Yeah.
just a
On
thought there.
the
Find out who holds that debt and just like call them up tomorrow.
Absolutely, yeah, we'll do that. One of the advantages of this particular private lender that 10% because it's a no docs
I understand.
loan. So that's the upside of that. But
See, well, not right, wrong, or indifferent. Like definitely not
yeah,
trying to,
no,
just
we're going to definitely call them and look at the options for sure.
yeah. If you got options, it would just put you in a better, negotiating
Mhm.
position.
Yeah,
So
cool.
awesome. Okay. Any other thoughts on that? Anybody else got a question on that before we maybe move on to the next one? Great job, man. That's awesome, dude. Like sounds like you got something tied up. That's great. And if I
Yeah,
can help you with at least the with tying up the debt or getting you across the finish line, obviously don't hesitate to call me. Like I'll be on
no,
standby for
appreciate it. Yeah, absolutely. Thank
that.
you.
Okay. Awesome. That's great. All right. What else? Who else is working on something really good right now?
I've got something that might be a nice segue from that as I
Hey,
was
Joey. Yeah, man.
there. I was looking at a building. It's actually just a shell of a metal building that is being sold for. They were asking $899 for it. They marked it down to $849, but me and Zane were talking about it earlier, and I was just trying to figure out what the actual value of a property that hasn't been built out at all. It's just the shell. It's got the doors and the roll-up doors, but it doesn't have the electrical or the plumbing yet. And, I feel like it's highly overpriced, but, there's nothing really to see how much they put into it already. It's a church that owns it, and I guess they're nonprofit. They were going to use it as storage, and for whatever reason they can't. But um, I offered them 700,000, and they said it was too much money. And I'm thinking it's just a shell. It's not even. There's nothing even. There's no walls, nothing inside yet. So how do you value a property like that?
They said that they said that 700,000 you were offering them was too much.
Well, they're asking 849 for it,
So
and
okay.
it's on a decently busy road. It can be broken up and it's 6,600 square foot, two roll. It's brand new, obviously. It just has two roll up doors. It could be split into two parts, but I was
Do.
told that the rent, like square foot in that area, would be about $11 would be a good amount to go off of. Um,
All right, so here's where I'm gonna challenge everybody. So what should Joey do? Don't answer yet, Zane, because I know you know the answer. But what should Joey do in this circumstance? He's got a building that he's looking at buying, and it's vacant.
use the vacant
Go
lot.
find a tenant.
Well, definitely find a tenant, but tie the deal up before you find the tenant first, of course. Like, and then we'll find the tenant. But Zane, what's your opinion?
Well, I mean, with this particular deal, the reason why we're asking this question is because it's not fully built out, right? Like it's just a shell with no plumbing and electricity, and we don't know what types of tenants would even want to, you know,
Do we know what the cost of
pay.
the rehab's gonna, at least of the remaining improvements are gonna cost?
Well, I recently did a build out on my warehouse, and it was like $100,000 for two offices and a bathroom and some concrete that was poured. But I mean, you could for two bathrooms, some AC. I was kind of figuring around, you know, 50 or 60,000 to put a couple bathrooms and some AC and the basic electric run.
So what does that cost then? So 6,600 feet, and it's gonna cost you $100,000 to go and improve. Is that? I mean, I'm just trying to think
I,
about
I
what
was
it
thinking
costs.
more like 50 or 60,000 to just put
Like what
bathrooms.
I would think is just, literally using our calculator.
Yeah.
Everybody over here, you guys, I mean, you guys all have this. But call it, just so everyone can see this. So, square footage, 6,600 square feet.
It's figuring about $11 a square foot if it was built out.
Let's see. So call it 6,000.
That's 6,050.
$10 a foot. And then value land's not important. Okay. So the market rent you think is $11 a foot?
Yeah.
What's the market cap you think? Probably $9. Let's do that,
I
$9.
had an 8 in there. So, yeah.
Let's use 9 just to be safe.
Okay.
And then you're thinking that the projected rehab costs are 50 or 60,000 bucks, or really whatever
Yeah.
the rehab is, whether you hire your guy or you don't. You think $60,000 to complete that job?
Yeah.
All right, call it 70 then. All right. So that's where you're at. Is this pretty accurate? Like, are we
That's what, that's what I
off, or you know
had,
what I
but
mean? Like,
I mean, I had it at an 8 cap, but, I mean, yeah, I
you
initially
put an
told
eight cap
him,
in there. I mean, that's okay too. I mean, put an eight cap in there. It changes your offer a little bit, but really the eight cap is the higher the cap rate, the more it benefits you,
yeah,
The lower the cap rate, the more it benefits the seller.
right.
I look
Yeah.
at this as the cap rate, if you can think about it, this is the number that an appraiser is going to value a tradable building at any point. Like if this building was immediately available on the secondary market, someone would buy it at an 8% cap rate. And it's vacant. It's not producing any income. So I'd be curious if it's really worth an 8 cap, right? I don't,
Yeah.
you know.
Well, my actual LOI that I sent him was 520,000 originally, and then I said, well, if we can get it contingent on getting a renter in there, then we could get it up to around 700. And his response was, "That's just we're just too far off. We're like he's not even going to present that
Well,
number."
well,
So
then
I
here's where we're at. What would I say next then?
Yeah. Well, good luck. Kick
Uh,
rocks.
He's not motivated.
I'm
He's not
motivated.
motivated.
Not
Yeah.
motivated.
Yeah. I just, mainly I wanted to see if what I was coming up with was making sense.
No, dude, you're right on. I mean, your underwriting is correct. Like you're definitely right on. Like I would underwrite a deal at a 9 because that's kind of what I'm making. Like I've got a couple of buildings under contract I'm selling right now, which I don't really like to sell, but when someone makes an offer, I just say yes on an offer that made a lot of sense. I'm offering them at 9s. I offered them at 8.5s, but we agreed on 9. But 9 feels pretty strong right now. And the reason why that is for everybody to know this and think about this is that if somebody is going to have a 1031 exchange, obviously they got cash that they got to go and deploy. Otherwise, they're going to lose it to Uncle Sam. So they can afford to overpay a little bit. But if someone is borrowing money traditionally, like in this case, in this circumstance, the building's value is 800 grand, they're going to have to show up with, $800,000, times 0.25. They're going to roll up with 200 grand. They're going to borrow $600,000 from somebody. So you got to think about it from the borrower's perspective. Um, and I only say that meaning that and I've said this before, but like that loan constant number right here, this is your most valuable metric when it comes to debt for everybody to realize that. So you can have your interest rate trade at whatever it trades at or whatever, your banker is going to lend you and say, oh, I'll give you this plus prime, whatever. This loan constant is your most important variable because it shows your intrinsic cost of capital because this number includes not only the interest rate of debt but also your principal repayment. So you're basically depending upon so if I shrink this amortization, it's going to go up. If I stretch it, it's going to go down. So meaning just so everybody's understanding this and very clear on this, your interest rate is your interest rate. The loan constant, and this is where the relationship between your loan constant and your cap rate really come into play with your debt service coverage ratio. Now, I know this is a little into the weeds, but just to be clear, the interest rate when you borrow on money is not really representing your monthly repayment. This just represents the actual net interest the bank is earning because they lent you money. They're also earning back the principal that every single month you're repaying, right? This column of principal, which was their money to begin with. This is the money that they're charging you. Now, this is way off, obviously, for this deal, but this is the money that they're charging you to use their money, but this is them you actually repaying that money. So roughly what you're seeing is it's the interest and the principal globally together, and that loan constant number is that percentage is really what you are repaying every year on a annual basis. So it's not the interest rate, it's the principal and the interest and what's what you're repaying every year. Does that make sense, everybody? Like to me, and I've told Zane this, I've told, the guys, the interest rate to me really is not what's going to move the needle for me. That's why I always focus on buying this down and not being afraid to borrow more money in order to lower the interest rate. Because when I do that, even keeping the amortization the same, it allows my loan constant to go down. So if I borrow this money at 5%, now I can even reduce, if your seller is motivated, but he's got to have a number and you guys are getting close and you just can't get off of this 9.5% cap rate or whatever his story is, if you're trying to get him to a 10 and you guys just can't come together and you're going to lose a deal, that's where purchasing this interest rate, buying it down, lowers your loan constant, which is your global cost of capital. And then you just increase your spread of cash flow between what you pay in debt service and what you earn in rent. So I look at this and I tell everybody like interest rate is malleable. Your loan constant is truly your cost of capital. So just knowing that as you move forward, like this is just this is just a constant. It spits out a number based on like all these other metrics, but this is your most valuable underwriting tool to know if your deal is going to cash flow or not. Does that make sense to everybody? Or anybody got a thought or question on that? Okay. Y'all can see the relationship like on your own pro formas. So, even if I reduce this loan to value, it's going to reduce it. Well, I guess it won't reduce. It just depends on how much money actually you borrow. Your amortization, if I shrink that, if I increase the interest rate, like that number is just going to change based upon the amortization and the interest rate, the amount of money that I'm borrowing, and for how long I stretch that amount of money out. So just a thought out there. Just like to me, this number is the most important metric to determine if a deal will cash flow or not. You can look at the debt service coverage ratio. That's always going to like be your banker's, best friend. But you know that this number is really like your best friend or your enemy. So getting this thing below what you're buying at, if you're buying something at a 10 and you got your loan constant at a 7, then you got something really tied up and really strong. Always having your cash flow, your cap rate above your debt or your loan constant, you always got a spread in the middle. So just a thought there. Okay, what's next? Anybody else? We got 10 more minutes. I want to make sure that we're answering everyone's questions and thoughts and everything.
Nolan, I have that deal that I sent you, the one in South
Hey, Mike.
Carolina.
Hey, man. Yeah. Let's see here. What's the story there?
Well, I'm trying to get a LOI together. I did have him on seller financing until he realized that I was going with the bank.
What do you
Uh,
mean?
me and the broker, we talked and we were kind of on the same page. I offered him like a 10.5 cap if he would seller finance the down payment. I got on a phone call with the seller and he thought I was bringing all cash to the deal and that he would I I don't know what down payment he would pay on that, but somehow he thought that that was the down payment. And he did not want to be in second position to the bank. So now I'm trying to come in with a lower offer. I've got it set at
Have you sat down with the seller?
6 point. I haven't sat down with him. I got on the phone with him. He is trying to pull capital to buy 14 buildings in Atlanta. He
I
bought
had
this
an opinion on
building or
this.
this
I had an
property.
opinion on this, Michael. I said, just
Yeah,
look.
wildly overpriced.
I thought it was overpriced based on market rent and market price per foot. I mean, you're looking at, if you're saying even, I mean, rent is 36 bucks a foot roughly, and you got it trading at 15 bucks a foot. This is overpriced. This feels like almost that deal I was trying to do up in Michigan, that pot deal. Not right or wrong, just
Yeah, the 35 per square foot is because the building size is only 19,000 and then it's got 26 acres of usable land. And the tenant does like national truck parking.
okay.
So it
How
brings
long is the lease
in
again?
it's 15 years absolute triple net.
Yeah. Okay.
And it's
He don't
got
want to
14
be
years left.
so forget the second position, that and the other. So does he have any understanding of like how valuable it is, regardless of being in first or second position, how valuable it is to save money in taxes? Because what it sounds like is again directing this at you, I would say, is have you gotten out of him how much money he's going to pay in taxes if he sells this building? I would
No.
say that could be your first line of defense, and your most important next step would be trying to extract out of the seller what he's going to do with the money, right? He's going to sell the building, blah, 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 whatever. But then it's like you want to hear him say, this is going to suck because I'm going to have to pay X amount of capital gains. You want him to realize how much money he is going to lose by selling, right? He's selling the building. He's got at least, or he's got it, offered at this price, which is great, whatever. But dude, I would look at it and think, if you can extract out of him telling you how expensive it's going to be to sell because of his maybe depreciation recapture and also the capital gains that he's going to have to pay, That's when you go and you slow down. Like I've said all the time, I like to offer you an opportunity. And it's very matter of fact. It's not like, hey, would you consider, or, hey, would you think? It's like, no, I like to offer you the opportunity to leave money in this deal. And he's going to be intrigued by it because he just told you about how he's going to get bent over by the government. And so you can basically say, look, let me show you this one pager on how it makes sense for you. Don't listen to me. Consult with your accountant first. It will lower the sales resistance way much after he's told you his problem that he has. If you're telling him the problem, he hasn't incepted the problem in his mind, he's not going to be interested. He has to incept the problem that he's going to be burnt by the government before he actually is open minded to hearing out your offer to reduce his problem that he already knows he has. But if you tell him he has a problem, I've got a problem, right? You've got a problem, right? I don't have enough fuel in my tank, right? I got to go to the gas station. That's my problem. Like, whatever it is, figure out how to extract the problem out of him. He incepts that he understands he has a problem in his mind, and then you offer them this solution on a silver platter, and you tell him to not listen to you, go consult with his accountant first. His accountant confirms that you, this random buyer guy, actually has a good offer. Then you've solidified it at that point. And then that's when he always comes back and offers. He asks, hey, would you consider letting me maybe leave 30% in the deal? So I'm not saying that I'm like a martyr, I'm like right or wrong, but I'm telling you, when it's positioned in that sequence, it happens more often than not because you're not selling anything. You're just providing them a solution to their problem that they told you that they had. And then their accountant confirmed that they had a problem with it. You know? So what I'm saying is, in this circumstance, you have jumped the gun. You were on like step 6 when you got to go back to step 1 and talk to the seller and figure out, hey, dude, because if he doesn't have a problem, he is not motivated. Well, then, dude, you're up the creek, right? And I'm not saying that's right or wrong, but the way that I look at it, man, is if you really want to do this deal and like actually get him to him understand that he has a problem of capital gains and depreciation recapture, make sure that you have to ask those open-ended questions to make sure that he discovers in his own mind, he incepts like, oh shit, actually, yeah, that's not a bad question. You're right. I actually do have to do this, that, and the other. I'm probably rolling out $1 million of capital gains. Slow down. John, I'd like to offer you an opportunity. And it's just like that. And you're not an expert or anything. Again, he's immediately intrigued because you just asked him 18 questions about him. You haven't made anything about the transaction. You made nothing about yourself. You focused on him, helping him succeed. And he's immediately drawn into what you're saying. It's sales, right? It's sales. And so that's the way that I look at it. When I spend 35 minutes sitting with the seller, not talking about transacting, never mentioning anything about myself. I only ask them what his golf handicap is, how did he get into the business, why did he buy the building, is he from this town, did he move here, where is he from, what do his kids like to do for fun, like only asking about him. And eventually the truth of his deal is going to come out. He's going to reciprocate. You can say, look, man, blah, 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 blah. I like to offer you an opportunity. And when it's positioned like that, dude, I'm telling you, it's like the reception from that seller is going to be totally different than you dealing directly with the broker who doesn't have a clue what he's doing. All he's focused on, he's salivating on, a HUD statement. You see what I'm saying? And that's for everybody, right? I'm not like a martyr. I'm just saying that like everybody on here, it's not that difficult to do. It takes some courage to go and sit down with somebody, especially when you don't feel like you know exactly what to say. But it's like what they say, never split the difference. It's like by Chris Voss, the book. If you haven't read it, it's an amazing book. You just mirror the guy. He's going to be like, hey, yeah, I went to high school here. I did this, that, and the other. So you went to high school there. So what you played football? You played football at John Carroll High School? Yeah, I played football there. Blah, blah, blah. And you just like, whatever he says last, you just like ask it in the form of a question and let him just keep going. And eventually the deal of the building is going to come out. I'm telling you, I'm only saying this because I've done it a couple of times. And when you put the other person first and you have genuine curiosity, they're going to receive that. They're going to be like, damn, this actually guy does give a shit. He's actually trying to help me. And then when you do make that genuine offer, he's way more likely to receive it with open-mindedness and a lower sales resistance than he would have if you're just like sending a document and saying, "Hey, man, would you seller finance me the down payment?" So that's the way that have viewed being the successful way of having sellers leave money in the deal. Does anybody have an opinion or thought on that as we're getting down to the end of our time here?
I have a
I feel like that's a
question.
really good strategy on the.
Go ahead.
I feel like that works really well for like the owner users who are selling, but I just don't see it happening with like the seasoned investors who are selling a building after like 10
Who have
years.
you tried this on?
I've tried it on owner users.
Seasoned investors have the same problem. Like I said, I'll be honest with you too. The two buildings that I'm selling right now that I've got LOIs from these guys that buying, I'm offering them to leave money in the deal because I understand the game. Like I understand the capital gains game. So I'm not saying it as unlike, oh, I'm high and mighty. I'm saying is in like if I know I have a capital gain problem, I'm much more likely to take a second position. And sure, I can foreclose, whatever. End of the day, I probably would not make every single dollar back, but it would screw that guy's deal up if he didn't pay me. And that's now his problem, not mine, you know? So I look at it from a perspective that it's not about a seasoned investor versus an owner user or somebody that's smart or not. It's if you listen to their problem and you extract the problem out of them, which is depreciation recapture and capital gains, well, they have that problem and you have a solution, and it's to leave money in the deal. And that's what I'm saying. Usually, that's why they always respond back with wanting to leave more after you've recommended using those vocabulary. You recommend you go consult with your tax professional. Like it's like that vocabulary. You sound like you are a sophisticated individual. You're a sophisticated buyer when you recommend somebody to consult with their tax professional. You're not saying go talk to your CPA. Like that sounds unprofessional. Recommending things with your tax professional to consult. Like that's what the big dogs are vocabulary are using, you know? So you use that vocabulary, they're going to respond to that. They're like this guy is not a he must have done this before. And then the CPA is like, actually, it's a pretty good offer because of this, that, and the other. You are going to have a tax problem. Then he's going to say, damn, this guy is actually not wrong. And my accountant even said I should leave more money in the deal. He believes what you're saying at that point. And he doesn't mind being in second position because he trusts you because you spent 35 minutes getting to know him as a person. So that's the way that I've looked at it, at least. And that's what's worked for me in the past, I guess. So, okay, guys. Anything else before we get rolling? I know it's past our time. I've got little babies at home. Maybe some of y'all do too. So, any kind of closing remarks as we kind of get rolling out of here? Appreciate Matt and Michael showing us our the deals that they're working on and everything. And of course, I'll say this too. Anytime you have anything going on right now, email Zane and I. Please always attach Zane and I on the same emails. Like I see my emails pretty much every day, but Zane can definitely get back to you a whole lot quicker. But if there's anything else that's going on, do not hesitate to get with either of us. We're always on your team and on your side. Okay. So
Nolan, real quick.
yeah, man. Yeah.
Yeah, just the other Louisiana property we were talking about. It was down in kind of Humboldt, Homa, Louisiana.
Huh?
The seller didn't want to do seller finance, but they did accept at a million, which is a 10% cap.
Sweet.
So I'm not sure if you're interested. I'll put together all the
Let's go.
summary, and if you're interested, we can still talk about it and see if you want to go forward with it.
Absolutely. I absolutely am interested. I mean, it's like anything else, any other deal. Yeah. So
Yeah.
here's what we can do. If you want to send that over to Zane and I, we can get our eyes on that and start shooting that out to all of our guys and get that thing funded pretty much quickly and immediately.
Okay. Sounds good. Yeah,
Good.
let's do it.
Awesome.
Appreciate it.
All right, everyone. Well, thanks so much for making it on. Again, just holler at us if you have anything else on your mind. And man, we're just excited to have everybody. And again, I'll put that. We'll shoot a little video, like a little message out on school on our the event coming up in November. And we hope that you guys can make it. And then, of course, everybody has the option to bring a +1 as well. So hope that everyone can all make that happen. So, all right, everyone. Thanks so much for making it. And we will see you guys next week. All right.
Thank you.
All right. Thanks,
Thanks.
guys. See ya.